All right, you can see the Forex Factory right there, right? What do you guys see? Do you see that or do you see group me? Should be able to see my screen.
Yeah, I can see the Forex Factory screen.
Okay, great. So let's begin. Let's start. So today being Friday, December 28th, we have German CPI all day, economic barometer. Notice there's a lot of low impact news. And of course, we don't really have anything here because of the holidays. And mind you, because of different time zones. Wednesday the 2nd, 3rd. The 3rd will be perhaps the starting point of where it'll be busy, it'll be volatile once again, but we'll go through that. You only have one high impact news, and Friday the 4th automatically to non-farm payroll. So the 4th will be the starting point, probably Thursday, actually, Thursday to Friday, where it becomes very busy. All right, so let's go through, let's discuss about the whole macro global economy. Today's up 1%. In my opinion, this is just a correction. That red zone right there is supply level. This trend line is based on the upper time frame. So let's go through a monthly time frame. This is what's happening right at this point in time. Whether we like it or not, we are still in an uptrend. There is nothing dictating that this is gonna fail. The major one is this impulse. So this impulsion is the major when we're looking at. If it breaks through here, then it is not the end of the uptrending market, but in my own honest opinion, this will go back up longer term. Either a new higher high will form, so I'm still bullish longer term. I'm dealing here with a monthly time frame, okay? I'm not talking here about daily time frame. On a monthly time frame, I'm bullish because it doesn't have anything in regards to a lower high. So if you know technical analysis very well, definition of an uptrend is simply a series of higher highs and higher lows. Okay, so hang on a sec. Let me put right there. So you have a series of higher highs and higher lows. Right at this point in time, you only have a series of higher highs. You have a series of higher lows on this side. Notice that first time that it broke through within these low and major lows right there with this impulse. So there are impulsions versus corrections, if you're familiar with that. So here's a major impulse. Here's the correction, impulse, correction, impulse, correction, impulse. And here just your minor ones right there, but there's none. But this is a major impulse, major impulse. And what it's currently doing here is a bigger correction. That's all it's basically doing. That's why longer term, I'm still bullish. It needs to create either option one, a new higher high. If so, then the continuation of the trend on the long-term basis is highly probable. On the other hand, if it creates option number B, option B, or option 2, and creates a lower high, once I see that, then this is only my viewpoint that the market is on a change of trend is happening, and hence this is where I'll be bearish longer term for a major correction all the way to 1,805 within these three correctional values right there, which is also a good level of demand. 50 percentile, great value of demand, an area of demand, 62% right there. But the major one is here, and this is where the downtrending market is going to happen as a form of a correction from this major, bigger impulse. Okay, so that's the only time that's going to happen. Other than that, there's nothing dictating that this is a failure or you're in a bear market. So opportunities are ahead, which part of my report actually that I wrote in my blog last week and the week before with private clients. Okay, so sorry if you're dealing. Let me clear everything here. Can I raise any questions? I'm more than happy to ask any questions because for me, I like objectivity. If you have any feedback, please feel free. Let me know to eliminate any form of subjectivity. Okay, so I'm not in an analysis as a technical analyst. As you as a technical analyst, your job is to forecast. Forecasting involves news, involves facts. Okay. Forecasting is not about what you think and what you believe in based on your own expectation. The market doesn't care about what you think. I couldn't care less as well about what you think regards into your own perception. However, if you have any questions and you give me enough facts or evidence why this is going to fail or why this is more on a bearish term, awesome. Then we can discuss it as a group until everybody agrees to it. Other than that, do you agree or disagree? Yes or no? Put it in your chat box for me, please. So as a mentor, as a teacher, as a trader, this is what I do, okay, in terms of pure objectivity. Not subjectivity, but objectivity. All right, so, okay, moving on forward then from there, let's go through a, okay, sorry, there's a question. I agree. Thank you, William. Let's look at, let me just erase this. Weekly time frame. Weekly, notice if you're also familiar with patterns, patterns such as piercing pattern. A piercing pattern simply means that buyers, after sellers who did come in, buyers basically disappeared, a lot of fear. Remember, everything here was all news-based, from the FOMC, increased interest rates, all the way down to Donald Trump, okay? So news will affect price, news will create fear, and when it creates that fear, that's where buyers will disappear, demand will disappear, supply will come into play, because when there's a lot of fear, sellers will come in, will push the price to the downside. Purely just supply and demand. That's a law of supply and demand, right? And that's what happened based on news-based. Piercing pattern simply means that after it's been way oversold and has reached an area of demand, see, right here, I said around 23.20, the low is at 23.34, pretty close. And the reason is because of this area of demand right here. Buyers supported the price on this side. Buyers believe that it's cheap. Someone created a valuation of the S&P and said, hey, you know what? This is way ridiculous. After 1, 2, 3, 4 weeks, 1 month, that sellers did come in. And mind you, seasonals, if you're a seasonal trader, so seasonal traders trade based on season. Like the Christmas rally, for example, is a seasonal type of trading environment. It didn't happen. So when it comes to seasonals, technically the month of December should be here. See, after this, with this bullish candle right there, you have a bullish engulfing, then all of a sudden you have a dark cloud cover, which almost created a bearish engulfing, but it didn't want to do that. It overruled the buyers, and this was already a bad sign, actually, and hence a continuation of price. This was where buyers started to disappear and institutions actually started selling. If you look at commitment of traders, institutions have been selling for the past, they've been selling already over here, actually, August, September, October. And then splat, right? If the price, and here's the key, I want you to calculate this, the opening price is 2601.5, the closing price is at 2412.4, divided that by 2. I want you to add both of them, 2601.5 plus 2412.4 divided by 2. I need at least about 3 or 4 different answers to make this objective. Everything is mathematical based. Even 0.1 makes a big difference. So we need to where everybody agrees to something.
Ray, you were asking about the big red candle?
Yes, please. So here's the price right there. Opening price is 2,601.5. The closing price is 2,412.4. Add that, please, divided by 2. What is the answer? I don't have my calculator in front of me. If someone will be able to do it for us, please, that would be great.
It's 2,506.95.
Oh, great. Okay. So that's 2 people that say is the same answer. Jared, did you get the same? Fu, what did you get? Joe, what did you get? William, did you get the same?
Yep, got the same.
Nope. Peter Point. Nope. Okay, same. Great. So it's 2,506.95. I want you to put this down on your journals. That if the closing price, currently the closing price is 2,505.4. If it closes above 200,506.95, then this has more probability that it will go and break the supply around to 2,697. Mind you, though, you do not have a clear cut of a trough. So there's no confirming low. Only when the week next week, well, next week is another short week, right? Then this is where the end of the month, we need to, end of the week, not the end of the month, I beg your pardon, end of the week. So if the end, which is today actually, sorry, not yet, today. If it closes about 205.6.95, currently is 2,507, they're pushing it halfway, then the odds and probability that a continuation of the bulls is going to happen to 38.22566 all the way to 50th percentile to 630 approximately is highly probable. Why? Because it's way been butchered to the downside. So you need some form of a correction before it creates another higher low and a continuation of the trend to the upside. So medium term, I am bullish, okay? Daily time frame, on the other hand, that is not the case. Why? Because it needs to create a low. When it creates a low on a bigger time frame, it creates a higher low on the daily time frame, bam, then that is the time for buying. 1, price is approaching supply. So mind you, 2506.95, that's for the weekly time frame. So weekly, that could be leading to 1 week, 2 weeks, 3 weeks. The possible probability it will continue is highly probable. Daily time frame, on the other hand, is a different story. Daily time frame, notice in terms of speed, it's decreasing in speed, decreasing in momentum. Why? Because it's approaching major supply area. Bears are still in control. This is why if you're going to create force between 2 forces, who is more powerful, the force to the downside or the force to the upside? So if you're going to place a bet right at this point in time, either buyer versus seller, where will you place your bet? To the buying side or to the selling side?
Sell side.
Absolutely. The force to the downside is way better, and hence, if you're going to place a bet, then it is better for you to put on on the selling side, not on the buying side. And it comes back here within the good area of demand, somewhere here, and if you see a higher low, this is the only time you're going to buy on a shorter term time frame using the daily time frame. Okay? So that is the key. Other than that, no go. Weekly time frame, I'm bullish. Monthly time frame, I'm bullish. I believe there's going to be some form of good opportunities. Daily time frame on the other hand, I'm not bullish for short term. Any questions? Does it make sense? Not makes any sense? Great, then let's go to the VIX. Looking at the VIX, check it. Very bullish on the actual monthly time frame. Now these also have a bunch of lower highs and a bunch of lower lows. It's only here that you can have a higher low, higher high. So on the monthly, on the other hand, I am bullish on the other hand. However, I need to see a proper higher low in order for this to head back up. I'll say that again. I need a proper higher low in order for this to head back up. So this is also what I want to see. In my own opinion, you need a correction before a continuation. When that happens, then the S&P is going to tank. This is going to go further to the upside. They need to fill this gap. I believe there's more room in order for that to head towards around the 50th percentile. So major is I'm bullish, and that now means that the S&P will create that correction once I see that lower high. I need to see that lower high. I need to see this higher low here too. And when that happens, this is going to go up, the S&P is going to tank. And we're now in an unofficial downtrend, bear market. Okay, so that's my take on the VIX. Weekly time frame, it's showing what we call a gravestone doji, where you have a lot of upper shadow. There's a lot of buyers at one point, sell it to the sellers did come in. So the odds and probability that this is going to head back down is highly probable, which I am bullish on the weekly with the S&P, provided that you have a clear cut of a peak. Right at this point in time, you do not have any. So in other words, short term, this is going to head back up to create a lower high. You have no lower high. You only have a bunch of higher highs and a bunch of higher lows. See this very steepness right there? Odds and probability that is going to be bullish. VIX is going to drop, highly probable, until it creates a lower high, bam, and then continuation. So when the markets, in my opinion, maybe next week or after the volatility, after the new year, you'll see the markets coming back up a little bit too. However, we have to be careful of the December, January 2018 when you have the big spike. Okay, let's go through the month. December, January. It could be a seasonal thing. It could be not be seasonal thing, but you just have to be aware with that, okay? Since the market's been very bullish. The Dow is same. In actual fact, he wanted to break through, heading towards here. It's my primary, 20,000. Didn't want to break on the other hand. So in other words, you have all this. I'm bullish for as a form of a correction for the next few months. If it creates a lower high, depending on the quarterly, if the Fed's best said that they're going to increase 2 more times next year, then that means then, depending on when it's going to be, before they will increase the interest rates, this could potentially head back up. Interest rates happen, this is going to tank. All right, so correction, continuation. but some form of stability has to form before continuation. So same thing, I'm still bullish. Some form of stability currently happening on the weekly. It's not as strong as the S&P. So stabilizing itself for a correction all the way back to 24 before it will tank to the downside. Daily time frame, I am not bullish either. I'm more bearish than anything because of this demand that becomes no supply, very strong. This both area of demand. Okay, where's here? 1 and 2. We don't make things up. Wanted to break it, came back down. So you're looking at a 4-hour time frame. It is correcting itself. Still on the downtrend. Beautiful lower high. You have a higher probability of shorting this to make money to the downside if you trade futures. Disclaimer, I'm not here to give you advice. I'm just giving you my point of view as a form of for educational purposes only. All right. All right, so that's the Dow. Let's go. Any questions with the S&P and the Dow? Going once, going twice. All right, I hope you guys see the same thing what I'm seeing. Like I said, if you have any questions, some form.
Quick question, Ray.
Yes.
So now our mind has been conditioned for we wanted to see down rather than going up, right? But the last 2-3 days, the price is going up.
Yep.
So now I'm not able to accept it. Like I still see that in a disbelief. It's going up. So how to flow like a water, like whatever the trend is going up. So flow with the trend.
Yeah. So the best analogy I can give you is this. You go, when you go to the ocean and you see the whole, sometimes it's nice and calm. Say you're on 101 and you're on the cliff and you see the ocean and it's like little waves.
Right.
These are just little waves. Now, when you drive a little bit closer to the ocean, next thing you know, you see big waves. So surfers are surfing those big waves. If on a bigger scale of things, pointing to the upside, but it all depends on your goal, depends on your intention, it depends on the way how you see it in regards to riding that wave. If you're boogie boarding, then you have to boogie board within all these smaller waves. If you're surfing, same thing. You're surfing where you see a bigger wave and you got to go with it. You can't go against it, right? So in other words, if you're putting everything all together, if the weekly and the daily is pointing to the downside, will you buy from here? You can buy it here, but your stop loss is so huge that your stop will be something down here.
Okay.
So let me minimize this one. Okay, let me clear that. So if you're buying here and you're buying at supply, where's your stop? Your stop will be this side or this side or even here. Those are your stops, but these are your major stop losses. These are major. These are your minor stop losses. But is your bank big enough that would be able to go all the way down to 18? Because if you're living longer term, because your long-term viewpoint is going to the upside. Even it drops through here, you're still in the wave. You're not worried about it because it could potentially go to this side, but it will take time. You're dealing here now 2020, 2021 in order to get up in there. That's why hedge fund managers, for example, or money managers dealing with bigger time frames, they're buying, but they're buying small, but it's for more longer term. Okay, so that is now where the difference lies. Now, if you're a swing trader, a swing trader is this, and you're trading with the trend, you're a trend follower, then you have a higher probability if you're going to short because of the trend down here, and potentially can come back down through here. Then this is your profit target. This is your profitability in terms of the amount of money you're going to make. Now, if you want to be smart about it and you're on a level of demand, you have here is your buying opportunity with an uptrend, long-term, medium-term, shorter-term, to go to the upside, where your risk is very small and reward is ultimately very high. Because one, you are with the trend, two, you're in demand, three, the risk is very small. Here, your risk is medium to high. Your reward, depending on where you're gonna sell it at, is medium to high. But if your stop loss is on this side, then you're gonna get stopped out. If your stop is on this side, you can also get stopped out because perhaps it's not over yet. It could potentially keep dropping. However, the bigger movement is to the upside. So position size is smaller if you're buying here. Position size is bigger if you're buying at demand.
Okay, got it.
Any other
Thank
questions?
you. Thank you, Ray.
You're welcome. Nothing? All right, great. Let's look at the dollar index and see if it's in sync with everything, okay, with the S&P and with the Dow. Cool. All right, here's the monthly time frame. Notice I want, at the end of the month, I want the price to go below halfway of this. And so if the price closes below halfway of the body, you know what, you have a clear cut of a lower high. Then you have two options. Option one, new lower low. Option two, higher low before it can continue to go to the upside. So shorter term, bearish. I'm sorry, I'm talking about monthly time frame. Longer term, bearish. Longer term, bullish. So we are currently in synchronicity with the dollar index. And why is that? Remember, interest rates is connected with the dollar. Interest rates is connected with the S&P, connected with the indices like the Dow and the S&P. The VIX is connected with the S&P. So currently in a good mode. However, if it doesn't want to do that, then stability, minor correction before continuation of price to the upside, and perhaps to go back to around 2017 above parity, 102, 103, 104. Then the strength of the dollar will be stronger, hence the strength of euro is going to tank even further for 2019. Okay, so in other words, we'd be bearish. On the other hand, if not, euro will be bullish until August, October of 2019, halfway, 6 months before it decides to head back to the downside, which is inversely correlated. Okay, so it also has the highest geometric weighted mean. Now, if the closing price closes above halfway of this, bingo, I'm going to be long with euro for long term, medium term. Okay, so it's already bullish. Notice stability, higher low. Doesn't want to create, and there's no higher high, but you have a higher low right there. Higher high right there. Next one is approximately around 116.20, somewhere there. Okay, all the way to 120. So going back to the dollar index on the weekly. Weekly is bearish. I'm bearish with the weekly time frame. However, with the condition right here, it's also in the level of demand right there. I want it to crack itself before it can continue to go to the downside. which now means that on the daily time frame, area of demand has a possibility of it coming back up. But if it breaks through 96.20, this is going to drop all the way down to 96.60, back down to 95. Likewise with euro, so we're already at a level of supply, have a higher probability of shorting the euro on the daily time frame based on the weekly, because it's also, well, it's bullish on the weekly, but if it comes back, preferably somewhere here, 114, 113, it's just too expensive for me at this point in time. I can go long from there. Okay, so that's the correlation now with the currency of the euro with the dollar index. So that being said, if it's now bullish on this side, then what's going to happen now with oil? In actual fact, oil is still struggling. There's still a lot of things happening actually news-wise overseas. It stabilized itself close to 142. This was actually a good trading environment. 142 has also a lot of opportunity to go to $50 right there. It's another $5 to the outside. So short-term correction, but let's deal in terms of the monthly. Look at that, 1, 2, 3. Monthly time frame, you see some form of stability before a continuation. So which now means same thing, that if this is going to be coming up pretty soon, oil has been lagging actually lately against the dollar index. So if it goes up, it has some room for this to go back up. Okay, so there's a lot of, this is more news based, to be honest. So I'm bullish with the monthly time frame as a form of a correction, and then weekly time frame, beautiful stability already has set into stone. Great prices of buying. You see here, 1, 2, here, good area demand, higher low. If it comes back down on the daily, somewhere around 44, $1 discount, great. Other than that, test trade is now in session. Your worst case scenario, your stop loss is at 42.20, $42 flat. The low of that one is 41.83. So either the low of that today or the low of that one more than close to a year ago. And I won't be surprised if next week they will push it up to 48, then you have a really good buying opportunity that will go through. We'll discuss that again next week, actually. Let's see. And because it's been battered way too much, 50, yeah, it's like a $5 profit to 55 right there to $10. For option traders, I mean, what's the risk? It's very small right at this point in time. Imagine, I don't know, if you get a 3 to 6 month out, that's good one right there. All right, so that's with.
So which one you use for options for this oil?
Well, there for futures is US oil.
USO?
USO, yes.
Okay.
Cool. All right, let's go through daily. I believe we will discuss daily stability. I'm bullish on the daily time frame. UK oil is up 0.5%, but it's the same. I'm also bullish with UK oil. Monthly time frame, same. It's not, didn't create a doji at this point in time. However, it's lying out of steam after 3 weeks in a row being battered. Currently in an area of demand. I won't be surprised if some form of a stability will form next month. Stabilizing it today on a weekly basis, so you also have an opportunity of buying UK on Brent oil, daily time frame, same thing. So you have a higher probability of winning by going long. Let's look at gold. Gold, this is very interesting. Gold has been bullish, right? This is old. It's already done. Can we remove that? Bullish for the month. Check it. AUD/USD. It's been bearish. So the Australian dollar has been lagging, unless it's because of copper, because of BHP Billiton and Rio Tinto. So copper has been lagging, but gold has been advancing. So that being said, there's an opportunity for Aussie against the US dollar to go long. Weekly, there's more room in order for this to head back up as a form of correction. Down here about $1,300 an ounce, 1325, 1310, strong supply level. Weekly time frame, still bullish, running out of steam. However, a better price of buying if this will come back as a form of correction, approximately around 1255, 1260, and then you have a buying opportunity from there. Copper is the same. Copper is based on the monthly, is in a level of demand, and you have some form of stability. I'm bullish with copper. Weekly, I'm also bullish, stability, area of demand, a lot of force from that one since 17th of September. You have a high probability, whereas with this one, you're trading options, you have a low risk, high probability actually. 2.8, 2.9 can go all the way to $3 basically an ounce. Daily time frame is a level of demand, correction, very nice after that bullish candle right there. Okay, that means that Aussie US dollar, which I am currently looking at, is a good opportunity. Currently in a level of demand, you have a higher wick right there, weekly time frame, stability from, I can't ignore the bearish candle on the other hand. This is just a low risk, high probability with area of demand, stop loss, January 2016. Low of that one is 68.27. Mind you, though, they're also 1 day in advance, and volatility is not that high at this point because a lot of Australians actually go on holidays as well during the end of the year. So 68.27. 68.27, low of this one is 70. So if you can manage to risk about 120 pips to gain 500 pips, I believe that is a good good risk to reward ratio, right? Weekly time frame, but if you're not willing to go below all the way that low at 68 cents, you can use this low, 70.002, 30, 40 pips, they make it 50 pips to gain all the way to 74. That's a 400 pip to the upside. I believe that's a great deal. Okay, so that's what I'm looking at on the Aussie. Gold is very strong. Copper has an opportunity to be bullish. Okay, so daily time frame, clear cut, a higher low, you have a lower high, and uncertainty at this point in time, low volume. All right, that's based on that. Let's look at the TYX. Is it in conjunction with the dollar index? So notice when 30-year yield has been dropping, it finally followed, dollar index actually followed. So I believe there's more. You have a bunch of higher lows. I believe this is going to stabilize itself. The yield is leading at this point in time. I am bullish for the next 3-4 months. And you can see it already on the weekly time frame, stabilizing itself at 29.5 to 30. Head back into 30 to 50. Broke out after how many times? It broke out with one. So this is very solid. A lot of selling pressure on this side. So correction, continuation, daily time frame, correction. If it can come back around 30, create a higher low, then there's a better price of buying. But other than that, they're in the same synchronicity. That's with the macro fundamentals. I'm sorry, K, UNG. I just saw William UNG. UNG natural gas. Okay, same. Let's look at it. That's not looking good. Remember, this was PG&E. Well, what happened? I'm bearish with this. I believe this is going to tank even further. Not really good. However, shorter term time frame, there could be more opportunities for a buying component, but you can't go beyond 40 bucks. Maybe somewhere around here. You see a lower high. See, they have to fill this gap. Only took how many weeks after that gap? 1, 2, 3, 4, 5, 6, 7 weeks to fill that gap. Farm stability and then buying. So short-term bullish, medium-term bullish, longer-term bearish. You can't go against the bearish time frame. There is an opportunity just to fill that gap, maybe 32, 33, no more, no less. Can it go fill that gap too? Yes. Can it go to 38? Absolutely. Let's look at approximately here. Already filled that gap. Stop loss around this side. If you can get a better price on this side, would be great. You can do test trades here. You're currently, testing area. Why? Because buyers, you have a lot of buyers over here, for sure. And you have this distance. Fill this gap. Can you go beyond that? If it breaks through that one, then easy. Either a new higher high or lower high on a bigger scale of things. So short term, I'm bullish. Option traders, you can probably get 3-4 months out on that, depending on what the strike price is going to be. But that's a good one. So William, I hope I answered your question there. Weekly, mind you, it's still bearish, right? But approaching demand. So if it goes around, 27, somewhere there, you'll have. But it could form anything. It could be a bullish candle that creates a bullish engulfing next week. But mind you, next week is also a short trading day. But you have, like I said, around 30 profitability here. That's what you have, 33 to fill that gap. Okay, so as long as you're not being greedy, I reckon you'll make money for sure. Okay, anything else that you guys need to want to look at before I look at currencies quickly? Look at the dollar yen and dollar CAD. All right, so you have anything, let me know. All right, let's look at, we looked at the euro. Oh yeah, GBP. GBP is another interesting one because of Brexit. Okay, so there was a great opportunity for buying actually yesterday. Currently, at this point in time, it's also need to be wary with it because you have a lot of force still on the downside, lower high. As far as I'm concerned, this is so volatile, it can come back all the way down to 125. So, but let's look at the monthly time frame because it plays a big effect. Monthly, I am bullish. So after, if everything will get settled, they'll sign those deals basically in the UK based on Brexit. You'll have a clearer picture that this is definitely has potential to go to 145 and above. It can go back to even 155. So if they get out and if they have settled, like I said, things, that is here. That's a lot. So 26, 1,000, 2,000 pips to the upside. So this is also something I'm looking forward to. I am currently keeping an eye on it. If the price will come back down just a little bit, that would be awesome. So since bears are still currently in control, I want to get a better price, probably 126, because like I said, on the daily time frame, there is no higher low. I need a proper higher low to buy. As far as concerned, the volatility will hit before it can continue. But longer term, I'm bullish. Medium term, bullish. Shorter term, correction as a bearish aspect. All right, so that's the pound. Yes, it is currently being recorded. So I'll give you guys a copy. Dollar yen. Let's look at the dollar yen. And we'll look at dollar Swiss. Dollar yen has been bearish, so the yen has been strong. I am bearish on a monthly. I believe it can go down 107, 105. The yen has been strong lately. Weekly, since the level of demand, stability, stabilization, correction, medium term correction, so I'm bullish, and then bearish. Okay, so daily time frame. Price is at demand. I prefer if the price will hit back around 110, 20, 110, somewhere here. But you're definitely in a buying area. Alrighty, that's the dollar yen. Let's look at dollar Swiss. Swiss franc, because of gold, has been bullish, hence that's why it's been bearish. Let's get the monthly time frame quickly. Because of gold, notice that the dollar against Swiss franc is bearish. It has more room for this to head back further on the 62 percentile of a correction, back around 97, another 130 at something pips before a continuation to the upside. Well, weekly, I'm also bearish. I believe there's some more room for this to head back down. Approximately about 97.50. Daily time frame, notice on the bearish move, breaking out in demand. I'm bearish with the dollar against Swiss franc. However, if this one would come back around 99, 99.30, that'll be great for a better selling price. Dollar CAD, so interesting because of the weakness of oil. The dollar has been stronger despite dollar. Look, the dollar is down 22%, 21 cents, right? Euro has been bullish, but for the past 2 days, the dollar has been dropping. So why is it that the dollar against the CAD is strong? It's because of oil. Oil has been tanking and the weakness of the Canadian dollar. In my opinion, on the other hand, since it's lagging, there's great opportunity for shorting. So longer term time frame, if there's more room for oil to head back up, then definitely this is also going to head back down. Oil, dollar CAD will continue. However, that is the limitation, the resistance level here in 37.93. So not an 80 pips to the upside. Can they push it? Very, very strong, but it all depends next month. So still bullish. Running out of steam on the weekly. I believe some opportunity for selling at this point in time. Hence on the daily time frame. It's running out of steam, just filling the gap. I want a doji and then sell. So I'm bearish because price are right at supply. I'm bearish with short term, medium term, longer term, stability to bullish. All right, so that's the dollar against the CAD. Last but not the least, let's go the Kiwi. NZD USD. Monthly time frame, I am bearish with monthly because of December. Could be some form of stability. In my opinion, just a correction after this bullish move that happened in November. It was strong. It's from 65 all the way to almost 70, almost a 500 pip move to the upside, correcting itself. That's all it's basically doing. It's trying to correct itself, but longer term, I'm bullish. Medium term, stabilizing itself at the level of demand. So I'm bullish with the Kiwi, where on the daily is bullish. We have uncertainty at this point in time, but price is at a demand level, so there's no lower high. You have this distance all the way that it could potentially head back up 69 to 69.50, 250 pip move to the upside. He's in an uptrend. Okay, correction from this impulse continuation. Alrighty, so that's basically the market update. We've dealt in terms of the monthly, weekly, all the way to the daily. So if you took some notes, check it out and see whether if they work. And then we'll go through again next year whether we're still on path. Do you guys have any questions? Anything you want me to look at? Any stocks? Any futures price? Currency price? Oh yeah, let's one more. By the way, I totally forgot. XJOs for the S&P ASX 200 in Australia. Since Warren, you are there. Same, right? Stability, nice bullish, and an uptrend. All you see fit here is a correction from financial meltdown. It just took 10 years in order to get almost up to where it's at. You have it's very different, of course, compared to the US market. They have more stringent rules. So in my opinion, you have this. If this is what's happening, it's still within the constraints of a bear, currently in a bear market right there, but no lower high. But since first time it broke out, but it's just within this level. Correction, I'm bullish with the Aussie, the Aussie 200. Weekly, already started. Bullish engulfing, very nice. Very bullish, a lot of movement right there. If it comes back to a correction to go long. So bullish as well with the weekly, daily, still on the downtrend, corrects itself back to 55.20, 54.80, even better. You have a buying opportunity before to go long if you're trading futures. Okay, pretty cool. So if you have any questions, yes, don't worry, William, I will forward the recording to you. And if you guys have any questions, please email me, estrators.com. And if you have any questions right now, feel free. And what
Yes,
answer.
yes, Ray. Can you send us the slide, the PowerPoint slide?
Yeah, for the class, the first one?
Yes, please, the goal setting. Yep.
Yes, will do. I will send a link on that one too, because that was good, good discussion right there. It's very powerful. Like I said, it works. Experiment it, try it out in terms of the 5 steps, and definitely powerful stuff. It goes directly to the inner core. When it comes to the market update, that is it. It's still bullish in my opinion. We're still in an uptrend. You have great opportunities for buying at the right time, guys, okay? So, and also it all depends on your intention as a trader. I don't know the way how you guys trade. It might be day traders, it might be trend followers, but if you're trend followers, depending on your intention, definitely you're in a good time for buying. All right, guys, happy holidays. I hope you guys enjoyed your Christmas. Happy New Year, and we'll see you next year.
Thank you very much.
TradingView,
You as well.
It's free. It's got a lot of stuff and what we look at, to be honest, Jerome. And then because of a lack of time, I didn't want to open other applications, to be honest. So, but I love TradingView. TradingView has all the free live data, and it's pretty much in sync to the software that I use. Thank you.
Thank you very much, Ray. Thank you, everyone. Happy holidays.
Happy holidays. Happy New Year.
Happy holidays.
There, guys.
Okay, bye-bye.
Bye.
Bye.